All right, so I've got the Duplex Doctors here. Now, this is Drew Hofler of the Duplex Doctors. Again, it's duplexdoctors.com. But Drew, tell us a little bit about the property you have behind us, because this is a great investment. We're talking strong returns. Why don't you tell us what you got going back here, and what are you making?
All right, thanks Rob. Thanks for the introduction. Again, I'm Drew Hofler with Duplex Doctors. I specialize in investment property. I not only help sellers and buyers buy their property, but I also own a portfolio myself. So if I'm doing it, I hope that you can do it too. So this property behind me is a triplex. I bought it last year in 2017, in March of 2017, for $360,000. Well, the great thing about this triplex is that my mortgage is $2,500. Well, there's 3 units, as in a triplex. There's one up at the top. It's a 1-bedroom, 1-bath. You could get $900. The downstairs is a 2-bedroom, 1-bath, $1,400, and the upstairs is a 3-bedroom, 1-bath, $1,600. So with that math, that's $3,900 versus my $2,500 mortgage. Yes, there's expenses and whatnot that goes into that, but if you were to subtract that $3,900 by the $2,500, you're at $1,400 a month, minus your expenses and whatnot. We'll call it $500 or $400 a month. I am cash flowing $1,000 per month from this piece of property. Now, what would you do for $1,000 a month in straight cash flow? Would you up your efforts at work so your boss gives you a huge raise? Because mind you, $1,000 a month, that's $12,000 a year. So that's a huge increase in your pay. Or would you sell your right kidney? I mean, both those things I don't really want to do. Both those things seem pretty hard and risky. So if you're looking at trying to better your income, I highly suggest buying a rental property. And Rob will then teach you best ways to then get tax deductions from owning this property. So that $1,000 just becomes more.
Yeah, so what the really cool thing is, there's 2 parts of that Drew didn't touch on. You know, $360,000 property, that might just make you go, holy cow, what's going on? Well, there's some ways you can get into that type of property. First of all, what do you usually at 10 to 20%?
So if you're looking at a multifamily, you can actually use the same financing as a single family, a townhouse, or a condo. So if you're looking at buying this property, I bought it with 3.5% down. 3.5%.
Is that when you were living in it though?
$360,000. I was living in the upstairs unit and living for basically for free plus a decent amount more.
So if you want to do that owner-occupant thing, you can get into it really early. So that's an easy way to get it. If you're not an owner-occupant, you're going to put cash down. Remember that you're probably going to bring 20% to the table. Your lender's going to care a great deal about this, right? They're going to want to know that you can pay your bills. You're going to want to make sure you pay your bills. But remember, that 20% cash, that can be an amazing return on investment. There's also some interesting things where you can use money. Maybe you have an old 401k from an old employer that you had before you got into this entrepreneurial gig. Well, you can do what's called a checkbook IRA. Now, you got to look into your own bureaucracy. You need to do all the research yourself on this because you have to abide by all of the wonderful government bureaucracy rules. But long story short, you can come up with some cash. There's also, and I don't know if you can flat say this, but there are hard money lenders that a lot of these guys get to know that maybe want to lend for a period of time to you while you do some back and forth. So getting into a $360,000, maybe a $220,000 investment might not be as hard as you think it is. So that's the first thing. It might be more doable than you think it is.
Educate
yourself.
That.
This house hacking idea is where you live in it for a little bit and then you get out after a year and a half. So you buy it like it's your own property. If you're young, man, take a look at this. Duplexes, triplexes, and quads. Go to the duplexdoctors.com, check it out. And then here's the second thing. So you were cash flowing a positive $1,000, right? $1,000 a month. Not only is he doing that, but on paper, because this is called passive income, it is not subject to self-employment taxes, first off. That's amazing. If you had any other business activity that's not passive, you're going to be paying that 15.3% self-employment tax. Now there's some phase-out things that you're going to want to look at and pay attention to, but the bottom line is this is tax-efficient income. Then here's the other part is because of depreciation. Let's just say, so in this situation, we're making almost $48,000 a year. Then you get to take, basically, you take the value of this property that's not the land, and you divide that by 27.5 years, you're going to get this, what's called a depreciation schedule. And what that does is you can fast forward, you're basically writing off the things that are going to wear off in this property, and that gets written off against that income. Now the third part of it, so that means there's a smaller amount of your property or your income that's actually being subject to the state and federal taxes, which you would be subject to. The third part of this is you can do what's called cost segregations. Now contact us, reach out on our website. We've got some partners that can do cost segregations, where basically what you do is you look at that property and you look at parts that are expensive, that are going to depreciate fast, they're going to wear out faster, and you can fast forward some of the tax write-offs, but you have to have an engineer and a tax account or an actual specialist come out and look at the property and do that. But you can fast forward even more write-offs, and there's some companies now that do this for pretty reasonable prices on properties north of about $250,000 type of deal. You always want to say, okay, is this worth it? If you have higher income, it's going to be more worth it. So that would be the second tax advantage idea. And then the last thing is people forget that when you save up money to retire or to live off of, you're going to have this nest egg and you're going to want it to produce cash flow, right? You need cash out of this. So all these people investing in their 401k, if you got $1 million bucket of money, you need to then transfer that into a monthly or bi-weekly or annual income every year. One of the coolest things you can do is actually take some of that money and look at getting a duplex, triplex, or quad that'll produce cash for you. They're a little bit less risk than what an apartment's going to be, because you're not in competition with the high-end professionals that are really putting the screws to the values and everything like that. So you tend to be able to get in.
There's an extreme lack of supply, because it's called the missing middle, and there's a lack of these properties out there just available for buying the property.
So if you're thinking of retiring, boy, contact these guys. You can find a property that'll produce cash. $4,800 a year on $360,000. Plus you get tax write-offs. Plus then you can be in the business of managing your own property. You could have a property management company and a bunch of other things to keep you busy in retirement. So it's just something to think about. I'm going to land the plane on this. Check out the duplexdoctors.com. I appreciate, hopefully you like this video. If you did, please like and subscribe. We're going to be creating a whole bunch more content, and it's all going to be about entrepreneurship, tax planning, a lot in the real estate market. We've got a third video coming out on retirement plans and whatnot, but appreciate the time. Hopefully you like this.